In the FMDQ markets, we have what we call the financial markets risk management framework. And the two markets under FMDQ are the fixed income market and the currency markets. So in these markets, we have triggers and we have risk management tools. In case of volatility, we have documented how the market should react. When I say the market, the traders should react. So FMDQ and the body of traders, known as Financial Markets Dealers Association, FMDA, have documented and agreed the market will behave. So for the foreign exchange market, which is what you asked me, we have triggers. If the market is trading at any point in time, and for some reason there's an appreciation to a particular percentage, a level, and a similar figure is also used in case there's depreciation of the naira. And we're talking of things being volatile on a particular day. The market had documented that at this point, FMDQ will advise everyone in the market to take a recess. That recess is for an hour for everyone to appraise the situation, to really find out what could be the information driving the volatility, the sudden intraday volatility. So it's not about the level was 196 yesterday and it is now 198 today. It's about within a space of time during trading hours, we just saw a high level of volatility. It makes sense, doesn't it, for us to have that recess, appraise for an hour, and then the market reopens.
Now, what do you think would have triggered that level of volatility? Because you talked about there was some kind of volatility in the market during that period. What triggered it?
We all live in the country, and the information, the different information that come out in the market drive financial markets. And I think the sudden reaction last week of the postponement could have caused a bit of rally in the market. And there's so many, I mean, at the end of the day, financial markets about rumors, news, and different things coming out. And people react, and you really cannot stop people from reacting to whatever news they pick up then. So the trigger was hit, the trigger was put in place, and the market went on recess. And immediately after an hour, the market reopened, but never touched the second trigger.
What's going on at the market right now?
I'll get to what's going on right now, but let me tell you what then happened Wednesday night, Thursday, Friday, because a lot of things then happened. The body of treasurers met, of course, immediately. And on Thursday, the bankers committee met. The bankers committee then decided that 5 CEOs, bank CEOs, should meet with the treasurers to fashion out how to arrest this escalating depreciation. And that meeting took place in this building last week, exactly last week today. And the first thing that was agreed was that the central bank should provide liquidity to that market to clear the pent-up demand in the market, because there's nothing as bad as businesses requiring foreign exchange for their businesses and not being able to get a foreign exchange. Remember that at that time there was the retail Dutch auction system known as ALDAS, which took care of very few transactions, raw materials, the PMS, which is the petrol, and kerosene, were the only items allowed in the ALDAS, whilst all other items moved to the interbank. That, of course, distorted the equilibrium in the market because the demand for foreign exchange was now, much higher than the supply to that market. And the central bank intervention, daily intervention, was not enough. At that point, no one could really quantify how much net to go to that market. The CEOs and the treasurers decided that first the central bank should clear the pent-up demand. So at least the anxiety in the market, even with the corporate treasurers, could reduce, because the corporate treasurers would likely front load if they couldn't get dollars and they hear of exchange rate moving up. So the next thing is there could be some level of panic because they have to run their factories, they have to run their businesses, people have dividends to remit, people have to pay bills abroad. Some had borrowed dollar loans they needed to liquidate and pay them. And this general panic could set in the market. So the first thing they put before the central bank was clear all the demand. The second was to calm the market down